This is the market comment for Thursday, February 22nd by Haralambos Pisuros. I'm Christina Marujos, and thank you for joining us here at XM.com. The dollar traded lower against all but one of its major counterparts yesterday, with the New Zealand dollar being once again the main gainer and the Japanese yen the exception. The minutes of the latest FOMC decision confirmed that policymakers were worried about the risks of lowering interest rates too soon, and yet the dollar remained on the back foot. The total number of basis points worth of reductions anticipated by the end of the year slid to 87 from 90, while the first 25 basis points cut has a 90% probability to be delivered in June. Today, dollar traders are likely to turn their gaze to the preliminary U.S. PMI data for February. Expectations are for fractional declines in both manufacturing and services PMIs, and thus, investors may dig into the details and sub-indices of the reports for clues on how employment and prices charged fared. The Kiwi extended its winning streak as more investors were convinced that the Reserve Bank of New Zealand could raise interest rates by another 25 basis points at next week's gathering. That said, for the risk-linked currency to continue outperforming its peers heading into next week's decision, New Zealand's retail sales for Q4, due out during the Asian session tomorrow, may need to come in better than expected. Otherwise, disappointment could result in a notable pullback. Wall Street closed its Wednesday session mixed, with the S&P 500 and the Dow Jones eking out small gains, but with the Nasdaq losing some ground. That said, with Nvidia stock rallying in after-hours trading as the firm reported better than expected earnings results, all three indices may be poised to open with a positive gap today. With the firm also forecasting fiscal first quarter revenue above expectations due to robust chip demand, investors may be willing to continue pricing future growth opportunities related to artificial intelligence despite overstretched valuations of high-growth tech firms. In commodities, oil prices rebounded yesterday as geopolitical tensions in the Middle East heightened and market participants got more worried about supply tightness. Gold also continued drifting north due to a weaker dollar as well as safe haven demand. This was today's market comment. Thanks for watching at XM.com.